Good evening, ladies and gentlemen. Thanks for joining me instead of watching the Super Bowl this evening so we can nerd out on some of the absolutely most absurd trades that have happened. And I've been pulling some stories out of Wall Street Bets I really want to dive into. We're going to update my portfolio where I sit against the S&P performance this year. We'll dive into some of these Canadian dividend stocks like Bell, which was a big conversation this week as telecom giants continue to crash. And I, of course, sold my TELUS anticipation that those earnings are going to come in with weaker guidance as Bell and Rogers have all kind of dictated here, probably pulling down the sector even farther, but time will tell as we also dive into some weird trades that I'm thinking about taking on just out of anticipation of some fascinating things coming up in the latter half of the year that I think are underappreciated in their stock prices. But that's, of course, gambling, and I'm not here to offer financial advice. This is purely just my own opinion here, folks. So if you are on the path to financial dependency, damn well, one day want to retire early, join me, hit that subscribe button. And if you want to chat with me one-on-one, join my chat groups and so much more, go to kylelivingston.com. That link is in the description below as well. But I want to kick this stream off with some of the best trades of the week that I've seen so far and some of the most intriguing with the massive pump on Palantir. These traders in Wall Street Bets have been posting some of the absolutely absurd gains, selling out of their entire positions. I really like how this guy finished this off. So I have mixed feelings about this one. This is bittersweet for sure, but it's hard to complain. Now I'm off to find the next $1 million. I think this is probably one of the most intelligent decisions this gentleman's making right now, realizing the hype that has been going on in the Palantir space. We've also seen some absolutely hilarious posts, and this is probably one of my favorites this week that I kind of came across, which this guy kind of gets annoyed because basically says, finally received the coveted "what the F are you doing" letter from Fidelity. Basically, this just says that you've had 3,000, look at this, you've had 3,385 trades that basically were executed in the above referenced account, and that overall equity value of your account decreased by $308,000. It's funny, if we don't hear from you, Fidelity will assume that you are comfortable with and responsible for the trading activities in your account. It's like, they're like, we're just trying to cover our own asses here, man. Like, there's so much insanity going on in the market. And I think this is like one of those times where you just want to be trolling the forums, not to kind of get yourself hyped into this kind of stuff, but just to look at the absolute absurdity that goes on. And toward the latter half of this stream, I'm going to show you the most absurd thing. A guy loses like $2 million. The story's wild. He shares his accounts and so much more. But let's get into a couple of comments here real quick. Before we dive into my portfolio, we're going to update the market, see where we finished the week, and kind of more of a downtrend depending on the stocks you hold. But what's your thoughts on buying an Audi or another automotive stock for the dividend payout? I would never buy a stock purely just for the dividend. We're always total return oriented investors, and I hate auto stocks because the margins are slim, and it's impressive to see the turnaround GM has been able to uphold, whereas Tesla's getting absolutely slaughtered on its margins, jacking prices up and seeing volume tank in the European areas, and I'm sure in Canada after the price hike, but I don't know how Tesla still holds up, man. That thing should be tanking. Autos are going to take a hit. Just look at the F over the last 2 to 3, 5 years. Yeah, it's a horrible industry to be in. Like, just because you love the cars, it's just a terrible, terrible business. I mean, I think with the exception of Toyota, I think Toyota's done pretty well. I haven't looked at Toyota stock in a while. It is necessary to report your TFSA contributions from Wealthsimple to keep contribution from accurate from the CRA. No, the CRA should keep all of that data for you. They actually send you reports. You should just be able to log into your TFSA at the end of every year or your CRA account, and they'll automatically update that for you because the CRA manages those accounts for you, just like your RSP. Once you file your T4s, I think in your filings, there'll be a deduction for your RSPs anyways that'll get calculated there. But your TFSA should be auto done. Nonetheless, folks, let's just take a look at the markets here real quick. First and foremost, with my portfolio, kind of still trailing the S&P a little bit here. I'm only up about 1.44%. I think the VOO position is actually up 2.74%. So we're doing materially worse. A lot of this also has to do in tandem with the dollar correction here. As many of you know, I've kind of reconstituted my buy prices to recorrect them since the beginning of the year. Obviously, we're up substantially more than this, but I think it's going to be fun to track how my portfolio matches. And I knew the currency conversion would be a massive factor to the performance, but that's not the only factor. Obviously, a lot of my stocks have been incredibly volatile since the beginning of the year, especially when it comes to Google that recently dropped on its earnings, which I think is opening up a prevalent buying opportunity. Though I've kind of maxed the position. Our average buy price between the wife and I think somewhere around 178-ish last time I looked. So we're still in the positive range, but overall, I mean, there's still a lot of activity that I think can go on with Google once we get past the April date of their court hearing for the monopolistic behavior. Otherwise, the U.S. side of the border has mostly been Tesla tanking, a lot of geopolitical events going on that have caused an insane amount of volatility, but earnings have been pretty good. I mean, for the most part, I think we saw Amazon get hit a little bit as well, Apple pulling back, but CapEx spending is still going through the roof on chips. So NVIDIA had a nice little bump up for those concerned with DeepSeek, though I'm still, a little skeptical on, what the, the efficiencies are going to be and how CapEx spending looks into these data centers into the future. I don't mind having exposure to NVIDIA, but I'm very impressed and I'm probably confident their earnings are going to crush, especially with all the backing of the mega tech companies. So we'll see how that pans out coming into earnings. I think in a week or two, I think they post what? Is it next week or the following week? I'll have to double check. But yeah, that, a lot of the QQQ stocks like Costco here is doing pretty good. Guessing everyone's platforms want liquidity. Yeah. But yeah, I mean, a lot of the QQQ stocks, I mean, Meta was up again this week, hitting all-time highs, which was really cool. But bleeding over to the Canadian economy a little bit here, it's been a bit of a mixed bag. I mean, the Canadian Railways posted, they tanked. The banks have been trading down. Actually, Royal Bank was down about 3 percentage points on the week, getting hit pretty hard, taking down my VDY till I motherfucking die. We got BCE, the telecom giants I want to talk about, getting absolutely clobbered because of Bell, dropping 8% this week. Yeah, the Canadian markets have not been having a good run, with the exception of mostly the energy sector, some basic materials. But if we just kind of skim through, yeah, the S&P was up, since the beginning of the year. I think on the week, it's only up about 1.35%, year to date up about 2.7. SCHD, obviously one of the largest holdings, just has a hard time getting ahead in the higher interest rate environment. We knew this would be a recovery play, but without interest rate cuts, this really isn't going to go very far, I think. So we're going to be kind of sidelining for a bit longer. I'm still happy holding it. I'm not really buying too much more. This is an RSP holding, but I'm looking at perhaps putting some XEQT or some other plays. I'm looking at some Chinese dividend stocks as well. I don't know what I'm going to buy just yet. I'm floating around on a few ideas. A lot of people hate the Chinese stocks, but I'm seeing quite the recovery in Baba, JD. A lot of the Chinese stocks are starting to recover here, and they're still trading at like absurdly cheap values if you believe those valuations to be true and the numbers to be correct. VDY getting slaughtered because of the drops in the banks and everything going on with, I think, mostly related to the tariffs and Trump. I will state one thing really quick here. I think one thing you're going to hear a lot of, that these tariffs are purely negotiation tactics, but it has nothing to do particularly with the tariffs themselves, because we all know it's a political joke and an economic disaster for a lot of people, including people in the United States. But I think it's more or less a tactic to negotiate the expansion of the United States, because I really feel like Trump is going to be the first president, probably since the 50s or whatever, when Hawaii became a state, or Alaska. I can't remember when those converted to U.S. states. But I think what Trump really actually wants is this kind of absolutely absurd growth for the U.S., being like literally getting other countries, whether it be Greenland. I mean, we know that's what he's doing, right? And he's just using tariffs, I think, is a convoluted negotiation tactic, but it's going to be terrifying. I don't think he's going to pull the reins back on that. I think he really wants to expand the states and get some crazy deals and get partnerships with other countries like the UN. So we'll see how some of that pans out. What are you guys saying here? National Bank also has no fees, I believe. Helping it puts. Are you guys talking about the no fees here? Questrade. I noticed that was a big talk in the chat group. My Questrade account has been dormant for 1.5 years. I used the other ones lately. Yeah, I think Questrade just announced, zero commissions, man. They're trying to catch up to the Wealth Simple. I wonder how long it takes for the banks to backpedal this and start bolstering some of their commission-free trades, because they're kind of ripping everybody off. But I really feel like eventually they're going to have to pony up and start cutting the trades, because man, the only time they give you discounts on trades is when you spend more money than you want day trading, I think is what they want you to do. Because I think you need a minimum trades a month before they cut the commission in half. But I think eventually, they're going to have a lot of competition. And when people start leaving the banks, I think they're going to be like, oh, damn, gotta start flipping on this. But anyways, folks, let's get back into this here real quick. Kind of moving forward, like my biggest, again, stock right now, probably Google. Meta's making up for the Google losses thus far, but still, I think, again, huge potential here. It's super cheap stock right now, in my opinion. It's not often you see these Mag 7 stocks trade at valuations like Google does, especially after some pretty good earnings. Yeah, they missed a bit on cloud. Their cloud isn't as dominant as Amazon's, but it's still growing at a very healthy clip, and companies still saw like a 30% year over year earnings growth. So I'm not overly concerned about it. I do want to talk about some of my more deep trades with the Duro. I'll talk about this more in later videos because I kind of got a 1 year hold for this, being one of my premier small cap stocks that so many people like to shit on because for some reason when you work with companies or these companies sponsor channels or they're too small cap, they're too risky, people just shun them away, even though the technology could be incredibly profound and they're well funded. So we'll see what happens, but I just got a 1 year hold for this guy. We'll see what 2026 brings. But yeah, I'm speculating that I don't think I'm going to have to hold this for longer than a year from now to see what ends up happening. Outside of that, I do want to round the conversation off to where a lot of interest has been like really beating down into, and that is our telecom giants. This is a big conversation this week because I was holding some TELUS, and I was really hoping that I was finding a bottom in this, and I'm sort of find out that I don't think we've found the bottom. And it's not because the stocks aren't posting reasonable earnings. And I think that's another really prevalent thing is that a lot of people that have the risk tolerance to buy and hold these, by all means, I think these are in relative decent territory, but I don't know how far the knife is going to drop. And again, like I'd rather wait to see the turnaround before I buy these because I don't trust the dividends, especially with Bell. And a lot of people were pointing that out because if they're not cutting the dividend, why is Bell not a buy for the massive yield? And we've talked about this because I really thought, they should cut the yield. I think most people agree at this point the dividend should be cut, but the factor that they're not cutting it is because they're using it as a drip. They've opened up a new dividend reinvestment plan where they'll give you a 2% discount to reinvest, but they're going to give you a new issued share. So they're going to take the money that they just paid you and put it back on their balance sheet, which is kind of insane when you think about it because the company has to pay tax on that dividend that they're paying you. You may have to pay tax if it's not in a tax sheltered account. And then you just reinvest it into another share that they issue at a discount. Like it just seems like losing money all along the trail, where these companies know if they cut the dividend, they're royally effed because these are pure dividend plays, I think, for Canadians, and they're holding it for that income. Somebody was saying I prefer XDIV, better returns. A lot of you guys kind of talking about the comparables between VDY, XDIV. I'll kind of reround to that in a second. But if we look at the balance sheet here, honestly, I keep pointing out that these companies have more cash than it looks like they have because you have to keep in mind they're doing a lot of amortization and depreciation cost of up to $1 billion. But when you look at their bottom line earnings, right, they only made 50 cents. Their dividend's almost $1. So the earnings, they make the dividend look absolutely insane. The company, I think, is probably closer to parity with the affording. Not really. Like, honestly, there's a lot of convoluted nature in these balance sheets just because they've done so much restructuring. Look at the severance packages for the year. I mean, they paid out a 200% increase, I think, of like, what was it? Like a $454 million over 2023, up like a huge percentage increase over last year in severance payouts, trying to do all this restructuring. Their interest expense kind of ballooned here to 1.4. I'm not even looking at the right numbers here. Jesus, let me restate that. I think the financing, severance and severance was 454. No, I was right. 454 million versus 200 million from this time last year. The interest expense here, which we take a look, was 1.7 billion versus 1.4. The same thing, crushing these companies continues to crush them. So the guidance is weak because they're still saying there's competitive pricing, which I'm sure you're seeing if you're getting a phone plan or renegotiating your phone plan. So, I mean, sitting here looking at it, like, again, the company is not seeing like a huge drop in revenue, but things are declining, right? So you got this kind of combination of lower guidance, declining revenue, interest expense still remaining high that they're forecasting for because we're still getting interest rate cuts. It's just a kind of a mess right now. But again, if you've got a long-term mindset, I think we're in value territory with these companies. I just don't want to ride the volatility because I'm looking for more short-term performance, and I don't mind missing out on a 10, 20% pop if I know the bottoms are in. If TELUS has found a bottom, maybe I'll buy it back. I'm sitting on a decent amount of cash right now looking for places to deploy it. Speaking of deployment, I also am a degenerate. I have two forms of reality that live on my shoulders: the conservative long-term ETFs that will ride me into my retirement, and the small fund where I like to degenerate my mind into things that I think are intriguing to me, like a Duro. Like some of you are pointing out, can I buy a Duro in my RSP? Is it not worth doing that? I don't technically. I did have it in my TFSA, but I moved it to my corporate account specifically because I'm trying to just keep my corporate stocks and my growth stocks and everything in there. Because if they do end up materializing losses, I can utilize those losses against my my company. Can't really do that in my TFSA. And at the scale of my TFSA, I've got like $200,000 worth of room, and I really don't want to take on any more risk than I have to, because I'll kind of use those as my I'm going to say like my risk off accounts, because I really don't need any more than moderate returns to get me to where I want to be utilizing my TFSAs. However, when it comes to risk, and I want to talk about some of the trades that I have that I think I want to put on. But let's get into this real quick. I'm getting distracted by your comments, but I want to point out a few things that I think are just absolutely insane. First and foremost, some of these trades and Wall Street bets, right? I want to talk about, like, Wall Street bets has been taken over by a few stocks, and I'm always like really intrigued to see what becomes a meme stock, because when they do, the performance of these companies tend to go like absolutely wild, because I truly believe we're back into a overvalued market. I think we're back into a degen market. We've seen it with the Trump coin. There's cryptos coming up. I think Barstool Bets just made a coin that went like absolutely parabolic. Like, it seems like there's a new coin coming out every other week. They always end up being absolute detriments to anybody that buys them after they hear about them. You kind of have to be on your Twitter and hear about it when it launches, trade it for a day and get the F out. I really feel like we're in one of those markets again, which are great. I have nothing against these kind of markets, but you got to recognize like what you're doing and how you're trading them, right? Because these aren't kind of markets where I think you can hold stocks like this long term, because what ends up happening is they overprice value. We're seeing with Palantir, like, you can't sit here and look at Palantir and say, oh, what a great buying opportunity. Like, I mean, it's an absolute degen stock at the value it's trading at, right? So here's another trade with a guy holding through earnings that managed to turn his his Rocket Lab trade into $2.8 million, which is just staggering, right? And basically he's saying he's been in and out of this, trading options, got in below $7. He's holding to earnings. He thinks earnings February 27th is going to be the next banger, saying, why would you hold Mag 7? You get 5x returns on these kind of stocks. Again, 5x is debatable, because if you caught the other spectrum when these things crashed in 2022, you could have lost a lot. Well, 100% unless you were doing options, right? So we'll see how these trades work out for these guys. Like I said, I've been bearish on some of these stocks for too long. I've missed some of the best trades. That's to my own detriment. But I know a lot of people end up going into these thinking they're long-term holds. And if that's for you, great. I'm really sitting on the fence right now, thinking a lot of these stocks are becoming much, much less than long-term, because I think they priced in about a decade. But speaking of that, it's not good for everybody, because I want to show you the other side of this, of the degen world, to always humble us. And I think this is one of the most humbling stories I've heard all week. It's actually a story from 4 months ago that I noticed, the YouTube channel I follow that kind of breaks these down, posted. But I'll read it to you because it's one hell of a read. It's really one hell of a read. And the guy shows the accounts, which I'm just blown at how people are so open to sharing this stuff. But anyways, this is an account called I Lost 1 million, 1.03 million to be exact, in the stock market. I've held this in long enough. The shame, the guilt, the lies, pretending to be cool and knowing what the fuck I'm talking about. I've been holding this in for years. I've cried and cried and cried. I'm fed up with my bitch behavior. It's time to fucking take things into my own hands and change. I'm not stopping. I'm going to gain all this back in slow and the right way. Here's my story. In 2019, I learned about the stock market. I want to make sure you guys can see this. I'll zoom in a little bit for you. Basically, like a responsible retail investor, I created a basket and diversified my equity investments. In 2020, I learned about options. My first gamble was a meme stock I found on Wall Street Bets that rhymes with pad peon. We know that story. But basically, that was the start of my entire 1 mil loss and life downfall. I felt so good to see those big spikes and gains, but it also felt like the end of the world when it all went to zero. For some reason, I always came back. I tasted the forbidden fruit and was addicted. True gambling addict at its finest. I feel like it's easier to become a gambling addict in the stock market. But fast forward 2 years, I need a source for my trading capital. I sold my house and car, maxed out credit cards, borrowed from the bank and lenders. I lied to family and friends to get money and worked odd jobs that were shameful. My wife, who I'd been with for 12 years, left me. We didn't sign a prenup, so there was the whole process. Then she took custody of the kids. Sure, I lost 1.03 million, but worst part of it, I lost loved ones. Every friend in my family, every single asset I own. I cried like a fucking bitch for days on end, slept on benches, backyards, and under bridges. I don't know if this is kind of like hyperbolic or what, but I managed to save up some money, and now I'm living on my own in a 1-bedroom apartment. I'm curious to who he was living with, his parents. I know, and after being married for 12 years, I mean, how old is this guy? 30s, 40s? I know I can do this. I know I can make it all back. I've had some stories and I've seen people do it. I understand all the technical analysis, indicators, price action, gamma exposure, OI, risk, free interest, blah, 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 fucking blah. I know it all. What made me lose it all wasn't my understanding of the markets. It was my ego, my greed, and my lack of discipline, my psyche. Buddy, I think when you start talking about indicators and price action and technical analysis, you're still a gambling addict because it's all fugazi. It means nothing. It's self-fulfilled prophecies, baby. If everyone follows the same tools and indicators and they all FOMO into the same trade, there's people they got to sell to on the other end that catch the downside, right? I've spent the last 2 years dedicating myself to mastering every technical aspect of the market. I've met 10-figure retail investors, hedge fund managers, and everyone in between. Really dedicated myself to learning the markets. Most importantly, I've made good progress mastering my emotions. I've even gone on months without masturbating. I need to model, this guy sounds like an Andrew Tate, like know-it-all. I needed to model a stimulus that was just as rewarding as gambling. This is like insane. I'm here to show that I can gradually get out of this hellhole. I've managed to trade back up to 25K. In the last week, I made 14K on options and futures. I will get back to 1 mil. I'm just here to prove to the world and myself that this isn't over. Is it the most hedged, low-risk decision? Fuck no. The degen surely lives inside of me, but I've tamed it. I guess if you're looking for entertainment or a person to root for, you can find me on X. Username is Lost1Million. I'll try to give a periodic update here as well. This is pretty much it for me. Here we go. P.S. Please don't report me to the suicide prevention. While I appreciate the sympathy, the messages I get here are quite annoying. I will be fine. Like this, the accounts this guy shares are just absolutely hilarious, right? He did give us a bit of an update as well. I managed to trade back 25K, and the last week I made 14K. I will get back to 1 million. I'm sure here to prove to the world and myself that this isn't over. This is one of those guys that I'm very confident, is going to end up blowing himself up again. To lose $1 million, like these are the definitions of gambling addicts that can't recognize their own downfall, that inevitably they come back to always. And I think it's always a sure reminder of like trying to test yourself to know what kind of investor you are. And the reason that Dave Ramsey says like you should get mutual funds or managers to manage your money is because when the market gets squirrely, are you going to get squirrely with it? Are you going to sell out of fear? Are you going to give up on your strategy of cost averaging? That's what a lot of people do. And if you're one of those people, you should not be managing your own portfolio. This is why Dave Ramsey says don't buy ETFs, don't buy this stuff in your own accounts. Because most people, unfortunately, can't handle the psychological, they don't have the wherewithal to deal with market conditions. And these are the kind of people on Wall Street Bets that are those kind of people. They're going to make a lot of money, but it doesn't matter how much they make because they don't have a limit. $1 million is life-changing money. You put it in the market over the last couple of years, 20% returns over the last 2 years we've been seeing. You could have been making $200,000 a year. I mean, did you really need more than that? This guy clearly thought so. There's no limits to like how far they're willing to go, right? Which is a shame. It's a horrible shame. But if we take a look at what's coming up for the degens out there, for those that have been playing the earnings, which have been absolutely all over the place, I really thought after Meta crushed it that Google would have crushed the same. It did not go that way. Same with Amazon, even though they posted really good numbers in my opinion. But one of my favorite things, as many of you know, is when stock prices go down and earnings go up and valuations get more reasonable. That's something we all need in this market environment. So it's nice seeing some value out there in the Mag 7. But we got McDonald's coming up next week. Coca-Cola, there's so many more of the value plays. I don't really wouldn't call them value stocks, but the stocks that have been struggling, right? Like Pepsi's been struggling. We've seen a lot of these dividend stocks that have been struggling. We also have the Canadian banks coming up, which after the post of the U.S. banks, I'm very excited. I'm thinking about buying a bit more VDY to upperweight some of the banks because they are down a little bit. I think going into earnings, we could see some exceptional performance there. So very much looking forward to some of that next week. But yeah, we should get kind of a more rounded earnings here, which will be neat to see. And I'm sure it's going to be spattered as it has been for a while now. But what are the earnings you guys are most looking for? Are you into Shopify? We're going to get some oil giants in here, Dutch Bros, Robinhood, should be posting here. Is this earnings calendar right? Yeah, I think should be pretty intriguing nonetheless. Outside of that, I will share with you one of my dank trades, what I kind of been debating on trading. I made a video about it a while ago, and it's been on my radar, and I'm finally kind of building up the hype to maybe put a position on. We'll see. But let's get into a few comments here because I want to see what you guys are doing on. The Gambler sounds like the man from Toronto. Are you guys watching football right now? Good God. I'm not a football fan. Is TELUS an option against BCE yet? I don't know. Telos could be an outlier and could perform better because even Rogers posted good numbers and it still went down, right? So we'll see what happens. But bro, can you share your thoughts on Archer? You guys really like Archer. I'll come back around before I share my trade. We'll take a look at Archer real quick, but let's see. Super Bowl, I think, Vic. Will she dip or will she not? QT going for the kill. Man, you guys really watching this video, this live stream, and the Super Bowl? Are you guys nuts? What do you think of Snap? Will it end this year? Are you talking about Snapchat? I don't know. I'm not going to. And nobody even knew Snapchat existed until they posted positive earnings for the first time ever. They are trapped stock. Yeah. Anyways, let me get one more comment here. What do you think about the long term? Yeah. So you and your Archer, when I visited Dubai, they showed similar machines. Yeah. It's really odd, right? Because we were talking about that this week a little bit when it came to like Chinese EVs. I feel like the rest of the world is evolving infrastructurally a lot quicker than the Western world is, because China has a lot of very advanced, really great EVs, but we literally tariff the hell out of them so they don't bring them here, which I find really interesting because the Western propaganda on China is kind of laughable at how fast their infrastructure is evolving compared to ours. But let's take a look at Archer. It could be an interesting stock trade. To be fair, like when it comes to Rocket Labs and a lot of these companies, I really don't think people appreciate sometimes the level of risk they're taking on with some of these things. Especially with vehicles, self-driving, like Tesla really does a good job at hiding a lot of data. Same with like Waymo, because Waymo, and they don't really talk about like the overtaking of like when somebody has to step in and control the system. Tesla doesn't really get too much into anything other than the broad numbers. They don't tell how many people are buying self-driving. I mean, it's kind of a calamity, really, and you can tell there's a lot of nefarious stuff going on with the data that they share. Archer, I haven't got updates on as of recently, but these aerospace companies, like I said, they're hyper high risk, right? Because I just don't know. Again, these are basic, just cheap helicopters at the end of the day, right? And people are already using helicopters to get around. So I'm just not sure what the dynamic of the business model looks like, because I've seen them kind of gone up and down. Archer, I actually worked with them with the company I work with, and we've done some videos for them and stuff like that. It's a very intriguing company for sure, but this kind of thing about like drones, right? Like whatever happened to drone delivery? Some other countries are doing drone delivery now. We're just starting to see that advance, but like there was so much hype around drone delivery, and now people don't even care. So you just got to be careful with these, because they typically come to market with incredibly high values that they don't actualize for a very long time. This is why I like companies like Aduro as an example, because like Aduro has like profound technology, and there's a lot of competitors in the space that are getting bought out that are worth billions. Like a lot of their competitors are trading at very high multiples, but they don't have the equivalent technology. But the fact that they're playing with a bunch of, $100 billion, $40 billion plus companies, I can wrap my head around the bull thesis on Aduro a lot easier than I can with some of these companies that come with a lot more risk. These things can crash, they can kill people. They're not as clean or cut or as dry as I'd like them to be. But that's just my personal opinion. It doesn't mean there's not a trade here or something you can definitely make money on. It's just something that I think, you got to be a little bit more cognizant of. I try and find things that are easier. So let me give you an example of what I think is going to be an easy trade. I'm not guaranteeing that. This is not financial advice by any metric, but this is a stock that I've been following for a while. And it's a trade that I really want to get involved with. And that, of course, is Take-Two Interactive. Now, I've done videos on this in the past as we've been patiently awaiting for the ever-enlightened Grand Theft Auto to come out that I think is going to banger this stock into a $50 to $100 billion valuation. Now, what bothers me is because the market is getting so hyped right now, this stock is starting to run away on its recent earnings. And it looks like we're getting some early investors that are getting built into the hype of what's coming, because it's what they've been pumping on the earnings call. And, they're going to charge probably the most amount of money anyone's ever really charged for a video game. It is going to be in the $100+ range. And when I run the math on the money that I think Grand Theft Auto is going to bring in, I don't think people are appreciating it in the stock value. Now, when you look at Take-Two Interactive as a gaming company, you cannot look at this company from an earnings standpoint. This is purely a hype trade, in my opinion, because if you take a look at their earnings overall, the revenue is fine. There hasn't been a lot of revenue growth with the games that they currently have over the last year. They've been stable, generating maybe $5 billion or whatever it is a quarter, $4 or $5 billion, but they haven't been actualizing any income. Their bottom line has been getting clobbered. They have no earnings. They've been like basically just depreciating and like showing losses and investing a lot into marketing and just scaling or whatever. But this company's never really traded off earnings. And I think people are like caught up on this because I've seen some shorts in Wall Street Bets that lost recently. I've seen a lot of people shorting the stock for a lot of these reasons, but I think they're wrong in shorting it. Because again, when it comes to valuing companies, sometimes future expectations matter more than what the company is currently producing. Look at Tesla as an example, right? Tesla's fundamentals are absolute trash and the stock should be in the toilet. But everyone's like, hey guys, AI, my hot guy in robotics, baby. How can you not value this at trillions of dollars, even though these have no business models and these robots, there's just no way in hell they're going to be doing anything that they say they're going to be doing for like at least 10 or 20 years. But that doesn't mean it can't trade it at a trillion-dollar valuation on less revenue and income than GM. But hey, I'd be shorting Tesla and I'd love to buy it at the right value. But I can look at other industries and sectors and say, look, like I don't think Take-Two is going to materially drop more than 50% in a black swan event like it has in the past. I think there's probably 50% downside max and probably somewhere to 50 to 100% or at least 100% upside, I think, from here. With the drop of GTA. I don't think people appreciate that GTA, is basically the most valued piece of entertainment that has ever hit the world 10 years ago. And, I think on day one, there was something like 10 or 11 million buyers of the copies. And I think it generated like 800 million or something. I'd have to run the math again, but it generated a stupid amount of money on day one, set records in entertainment. And I think it's going to do the exact same thing. And I think people are so sidetracked with Trump and everything going on. They're not really paying attention to this trade. And I don't care what GTA actually brings in. I am just anticipating an absolute stupid amount of hype for this game release. And I think it's going to generate billions of dollars probably within the first couple of days. It's probably going to send the stock parabolic and people are going to be streaming and talking about it. It'll be the first game to come out people might actually like. And yeah, I'm excited for it because I do follow gaming pretty intensely. I was very disappointed to see Dr. Disrespect, Midnight Society completely bunk their game. I really thought that was going to be the first step into NFT trading. I've been really looking for the first take where crypto meets gaming because that is the next evolution. It's the next billion-dollar thing that's going to happen. And for some reason, it's just not happening. It really breaks my heart that video games are not evolving the way they should be. And I don't know if that's just because of glitches, cheaters. It makes it really hard to do tradable game things to pull them outside of the game and use NFTs to trade them or what, but it really bothers me at how slow the evolution is of what's going on here. So the only real trade I see that I think is going to be reasonable is probably Take-Two, and take it or leave it. But yeah, that's kind of my current thought here. I think MDA has a great backlog. Are you on Blossom by any chance? I am on Blossom. I don't share my portfolio there. I do go in once in a while just to see what people are doing. And see what sponsors are on there and make some free cash, and it's a fun little app that's growing pretty nicely. I've worked with Brandon actually on a few sponsors that I worked for, actually at Duro. I think we ran a Duro campaign on there, and some other stuff. I've worked with him a little bit on with some of the Blossom stuff, but yeah, no, I haven't. I'm not too religiously involved in Blossom. What I'm trying to do here is step my YouTube game up. I will show you guys something cool if you're into just editing and stuff like that, because I've shown you some of the AI tools, but right now I primarily just focus on YouTube because like I only have so much bandwidth, and I find when I core focus down on just one thing, it does much better. I mean, my YouTube channel is doing substantially better. Could just be the market environment. A lot of degenerates coming out right now. A lot of people thinking they're more than they are in a market environment that is so giving that soon will probably be unforgiving. But nonetheless, what I am looking at doing is trying to figure out what like I can really expand with. And I did TikTok for a little while. I kind of pulled back on it, but I'm looking at building out my YouTube shorts. And I think Google is the future of entertainment. So I really want to continue to build my foothold in kind of the finance niche as a Canadian and maybe try to become one of the dominant Canadian influencers. And I'm going to be using, this really incredible tool that if you guys have never tried it and you make entertainment. If you're in anything creative right now, you have to be using these AI tools. I wish I could buy into them. But if you take a look, like Opus Clips, man, I'm going to take this whole stream. I can just paste the link in here and it's going to crap out 10 shorts that are narrated and everything. These are the same tools like Caleb Hammer's using. I see so many influencers using these, and I'm kind of feel like I'm limiting myself by not taking advantage of shorts and just trying to continue to build out my YouTube channel in a better way for people that don't sit through the longer form videos or these live streams. But yeah, there's a lot of options out there. I think this is a fun tool that I've just been messing around with. So you'll probably see some more shorts come out of my channel. But yeah, otherwise just having fun with a lot of the AI stuff. And, I don't know if you guys are using like Google's image generator. I really, really love Meta's image generator still. Llama. I mean, it's literally the clips that I'm using for this live stream are all generated by Llama, which I think is super, super cool. But otherwise, folks, it has been a fascinating evening, and I'm sure most of you are sitting there watching the Super Bowl, and I'm sure we'll get some fun highlights from the commercials and stuff, because I think Elon was running a commercial. But yeah, if you have any last questions, and maybe we'll finish up here. Is it necessary to Quest Trade? Yeah, we saw some of the talks of Quest Trade earlier. No more questions, folks? You can make me sit here in silence as we finish up the stream. Ooh, man, get a little warm in here. Yeah, otherwise, folks, I think I'll let you guys go and kick off. I won't take up any more of your time. I'm presuming that's what most people are doing. So stay cool, stay awesome. Try not to be too much of a degenerate. Let's keep our minds steady into this very volatile market that I think we're going to head into. But stay cool, stay awesome, folks. Peace.